Everyone, welcome back to my YouTube channel. So in this video we are going to cover SF560 subsequent events, which is very important from exam standpoint, and I want you guys to watch this video till the end. And if this video is helpful, please do hit the subscribe button and share with your friends. It means a lot for me. So first and foremost, what are subsequent events? See, auditor, no, in this standard we are going to cover, like, after issuing the audit report, auditor gets to know certain information, then what the auditor is supposed to do. Okay, so first we will be covering that I'll help you understand with this timeline. Okay, so first of all, auditor is giving an audit report as of 31st March. Okay, so he performs audit procedures here and he has given audit report on June 15th. Okay, now after issuing after June 15th, auditor got to know certain information. Okay, now if that information auditor has got to know before, then auditor would have given a different opinion. Okay, in that case, what auditor is supposed to do? Now, first and foremost, he'll discuss the same with the matters with TCWG. Second one is he'll determine if financial statements need to be amended. Okay, and then he will see what is the management's intention, whether it is amending the financial statements or not amending the financial statements. Okay, so generally what happens is when the management amends the financial statements, no, now the auditor will give audit report as on June 20th. Okay, as of this date, auditor will give the audit report. So to give the audit report, auditor will perform audit procedures here also. So first of all, he has covered 12 months here. Okay, now he's covering even this period also. Okay, there is an increase of responsibility in this case. Okay, so financial statements are amended and audit report will be given. So auditor will extend audit procedures to the new amended date and provide a new audit report. This is when the management is amending its financial statements. Okay, so to reduce the responsibility, the standard says there are two options. Okay, so first and foremost, there should not be any restrictions from the law. Okay, now when I say reducing the responsibility, what do I mean? Okay, anyways, you have to give audit opinion for this 12 months from April to March. Okay, now there is a reduce of responsibility only to the subsequent event. Okay, earlier we were doing audit procedures for all this transaction from 31st March to June 20th. Okay, now to reduce your responsibilities, the standard says you can restrict your audit procedures only to that amended portion. Okay, only to that particular event you can perform audit procedures and give an audit report. Okay, now there are two ways of doing this. First one is your dual option, and then the second one is your issue a new audit report. What is dual reporting? Okay, so let's talk about dual dating. Okay, understand that in the same audit report, auditor will insert another date. There will be only one audit report. First date is your 31st March. Okay, and then the second date will be your June 20th. Okay, now let's understand how this is happening. So example here, if you see audit financial statements year end 31st March, your auditor has issued an audit report on 15th June. Auditor got to know certain information on 20th June, right? So auditor will update new audit report to reflect the new information, but limit the responsibility only to specific subsequent event. He is limiting his responsibility only to specific subsequent event. Okay. So auditor will report will be dated, primary date on 15th June. Okay, that which he has issued earlier, and then the second date will be 20th June. Okay, on our report dated 15th June is modified in respect of matters described in note X. So in the financial statements, when the management amends the financial statements, it will add another disclosure. It will give another extra note in that it will describe about that subsequent event. Okay, so auditor will give his report stating that our report dated is modified with respect to matters described in note X to the financial statements, which was identified on 20th June. So that is how your dual dating works. Okay, now let's try and understand your issue of new audit report. Same example above. Okay, so here in new audit report, what auditor does is he'll issue a new audit report, and in that new audit report he will insert V.imp paragraph. Okay, in that V.imp paragraph, auditor will give description about the subsequent event. Here also auditor is reducing the responsibility. Even in dual dating also they are reducing the responsibility. They are not doing audit procedures for all the transactions that happened after 31st March. Okay, they are only performing audit procedures for that one particular subsequent event. And here in the new audit report also, no, auditor is inserting an V.imp paragraph and explaining about the subsequent event. Okay, first of all he is giving audit opinion till 31st March. And then they're inserting an V.imp paragraph and highlighting, that is addressing, like getting the attention of users. Okay, and explaining about the subsequent event. Okay, So they're not performing audit procedures for all the transactions till June 20th. I hope you understood my point. So that's how the two methods work. Okay. Now, fourth point is that if management does not amend the financial statements. First point was, if management, the earlier whatever we have discussed, that is when if the financial statements are amended by the management. See, auditor analyzed and he determined that the financial statements have to be changed. Now after discussing with the management says no, we won't change the financial statements. Okay, in that case, if auditor not provided to the, if audit report auditor has not given to the management, then he will modify the audit opinion, but he has already issued the audit report, right? In that case, notify management and TCWG to not issue financial statements to third parties. If he has given the audit report to the management, then notify them not to issue to the third party. Okay, but still if management is issuing to the third party, then auditor will go and take legal action. I hope this point is clear. If this video was helpful, please do like, share and subscribe. Share with your friends and let's go.